Welcome to September 2020 in our LeanLaw Accounting Pro monthly meetup. Thank you all for attending and being part of our community. As I just mentioned, please mute yourself but feel free to ask questions. I want this to be interactive along the day, the way we go. Here's our agenda today. Our key conversation is with Gary Allen, my cohort and founder and co-founder of LeanLaw and partner. We're going to talk about data, and we're going to take a little step back and talk a little bit about law firm structures and then get to what data is most important. And I'll stage that conversation. It'll be in the second half of today's activity. We will do a quick LeanLaw Accounting Pro update. Tracy Todd is not with us today because her daughter gave birth to her second child, so she's a grandmother for the second time as of yesterday, and she's obviously focused.
I don't want the pricing for her.
She's focused on that.
I don't know what I should charge her.
Okay, I gotta find that person and mute them.
We didn't get very far.
That was Kim, no.
I'm not sure who that is, but we'll keep going. I'm going to do a quick product update. Now, we just did this meeting a few weeks ago, so we don't have any huge major updates, but there are a few little things that I do want to show the group. Specifically, we've integrated trust requests in a beta program, so we really want everyone to know about this with a partnership with Gravity Legal. A few little nuances to our reporting data, one very big one, which is underlying data, and then a little tweak to accounts receivable. So that's our agenda for today. I do want to make note of announcements. So I will be doing a webinar with Lauren Fogelman. This is the second of a three-part series. I'm going to message out the group right now, the event. So I'm chatting out the page to it, but it's a three-part series. This one is called How to Create Irresistible Packages. Now this is followed up by the secrets to eliminate cleanup surprises. So we talked about cleanup surprises. One of the key learnings there was about packaging as it mitigates how we can do with cleanups. The third one, which will be November 12th, which would be 3 ways to stop attracting the wrong customers to your businesses. This will be the 8th and 9th webinar that I've done with Lauren, and so we are very fluid and we have a really dynamic conversation. I just wanted to re-mention that we're still doing some compensation tracking and product comparison work. So that will be released very soon, and a video to accompany the compensation tracking as well. And then lastly, QuickBooks Connect. And I have a poll for the group that I want to ask, which is, I'm going to launch it right now. So if you could all ask, I'm curious about the group's interest in virtually attending QuickBooks Connect because the conference is not going to be held online. If you could all vote, I would appreciate it. So far, no one's voted. Oh, yeah, I got some votes. I'm going to give it just a few more minutes since we haven't had the group. Okay, so what I'm learning is the majority are going to attend. More than nearly half of you are really going to be online the whole day, and another 40% of you will participate, but not necessarily spend your whole day there. So thank you for that feedback. LeanLaw's going to sponsor the event. We are also going to do some specific law firm content. We're working with the Intuit team specifically, the QuickBooks Online Advanced team that we're working with in our partnership to think about how we can build some cohesive content around law firm and law firm support. So expect to hear some announcements coming from that. We're really bummed as a company that we can't attend. There was always 3 benefits to us, obviously, being able to show our product to new accounting folks, but most importantly, connecting with this community. It was always fun to put faces and see people live. So we're really disappointed we won't have that. But of course, 2020, 21, we should tame the virus and be on our way. Since we're just kind of talking, I really want to ask a question before I dive into the content, which is, I'm going to launch this other poll. So this is just us personally trying to understand what can we do as a company to support you. So what's most important to you, this first question, I'm going to ask 2 more polls. what's most important to you in participating with LeanLaw Accounting Pro? What drives you to show up today and interact with us? So if you could pick one of those, I would appreciate it. And I want to get up a little bit higher. Oh, that's interesting. All right, so the majority of you, by a long shot, said LeanLaw product knowledge. So that's super helpful. That means I should put more product knowledge. And Scott says it's all of them, and I appreciate that, Scott. So I have one more poll to do, which is, and I think it's kind of redundant. I'm not a professional pollster, so bear with me. But I want to ask, what should we focus on? Which is similar, but a little bit different. So what, if you look at these 5 things, what would you want LeanLaw to focus on in terms of helping you be successful within our program? Okay, we're at 60, 70, we're almost there. 81%. All right, so the majority of you say product training and certification, 60%. The second number is teaching you what law firms need in terms of services and support. And then one said sales assistants, and one said getting firm referrals. Awesome. Thank you for that. That's very helpful to get that feedback to us. All right, let's move forward. Quick announcement. Speaking of helping you learn LeanLaw, on September 15th, we are launching our LMS content, our learning management system content. I'm going to stumble through this because Tracy normally would do this, but this will begin registering people for the platform so they can log on and access the overview courses. This is part of the certification. If you remember last month, I mentioned there's 3 levels of certification and working through that credentialing. We'll have the ability to upload your profile pictures and be a little bit more interactive with that. It's been a really stale system previously, meaning we had to do all the work. We're modernizing that a bit. And then see other requirements and benefits that you'll be able to interact with. I warn you, it's a first pass, it's a beta. We're just trying to push this online as a minimal viable product. This is an absolute focus of ours as a company to build out this LMS system. So you'll start to see that. You will all get some notifications, and by registering from here, that's going to help us register you into the system and start that process. So I want your feedback on that, and that is happening literally, today's the 9th, in 7 days ish, 6 days. So so that's the big update, is that LMS system's launching in the net, to your point, and helping you get educated. That's one of the tools that we want to do. I'm going to come back to here. I want to talk a little bit about the product, and I want to pull up a few things in the demo. So I talked about some new product updates. Now, keep in mind, LeanLaw on a monthly basis has a user meetup, and you're all welcome to attend, that goes into a deeper dive on product knowledge. So Chase Sullivan and our CTO, Chase Sullivan's our customer journey expert, meaning he's looking at the experience of the user and optimizing that. And our CTO, Fred Wheeler, hosts a monthly meetup that goes through all of the new features that are in LeanLaw. So we don't have enough time today to cover everything, but I do want to highlight a few things. First is we've partnered with a company called Gravity Legal. Gravity Legal is a payments firm, and they have a specific program for legal companies to receive trust monies electronically in a trust compliant way. Why it's trust compliant is really 2 core functions. One is that the money holistically, meaning if you ask for $5,000, $5,000 will electronically land in the trust account, meaning it supports 2 bank accounts, the operating account and the trust account. The second feature is that they'll hold those fees and take them out of your operating account. Those are the 2 critical. There's some other nuances in terms of compliance, but a standard QuickBooks payment architecture does not support the 2 accounts. So some law firms try to use it, and they're doing it incorrectly by passing the money through the operating. Some bar associations, some state bars allow that, but in a general practice, it's wrong. And in wrong meaning not compliant. So Gravity Legal does fulfill that. So in LeanLaw, now we have a trust request. So we have this feature that allows you to do a trust request. And when you do this, you can pick your client and your amount and put a little memo in here and request the funds. When that is sent, your client will receive a trust request. So the client, it would be all branded for that law firm, and they get a nice little receipt. Now that client does not need to use Gravity. So they could write a check and not pay it, but the idea is that they can receive that. And Gravity is very competitive in the rates. I think it's 0.035% on an ACH, so 0.3%, I think it is, and it's 2.9 on credit cards. No monthly fees, so it's all transactional, and that's a feature that is specific to LeanLaw, meaning anyone who signs up within the LeanLaw ecosystem gets that no monthly fee waived. Now, here's the super cool part. When the client pays the money, this is the partnership, and this is something unique. LeanLaw will receive that in a deposit, and what we will do in LeanLaw is that we will, the client's been set up, we will, as part of that deposit, we will set up the trust ledgers. So the money will be deposited directly. Oh shoot, sorry about that. I'm not sure why this asked me to do a code right in the middle of a demo. So LeanLaw will handle, LeanLaw and the partnership will handle the, this is embarrassing, but you all know me and know that's not normal. So LeanLaw will actually, with the Gravity partnership, stage the specific ledgers that the money will flow into. And if it's already there, you'll see that money flow into that ledger as well. So the entire back end of that workflow is facilitated with the LeanLaw and Gravity partnership, meaning we wrote technology between our platform and their platform such that when you request a trust, it creates a client in Gravity. When Gravity receives that payment, it makes the proper deposit tethered to that proper client in QuickBooks, and then obviously LeanLaw sees that follow through. So you'll see this $5,000 payment. We have it with other providers. When you say we, you meaning the LAP, Linda? You meaning, or are you just?
No, I mean, when we do. No, actually, with other merchant service providers, you can make a connection with them and get a commission on hooking them up in QuickBooks or other places. So then we get a fee every month off of the fees that they collect.
I know that they have some partnership programs. I'll be very transparent. With LeanLaw, when LeanLaw initiated that, the most important thing for us was to fill a feature gap. And I did sort of say, hey, at some point, once we get some traction, we want to discuss about a partnership program about sharing revenue, and we would pass that. And I know they have something on the field, so Linda, I'll check in with that. And I don't have an answer to you today, but they're very open to that. So there's not, I'm sure it would happen. The last point is once you get paid, you do get a trust notification. So the email saying, hey, someone paid, and it ties it back. So LeanLaw is passing that entire architecture through Gravity and then back into LeanLaw to eventually make it completely electronic for that trust request.
That you should be paying rent every month.
Someone needs to mute themselves, please.
So this is where you would send those vendor invoices for automatic reading and coding. This is where you would be able to.
Okay, so that's a big feature for us that we have that trust workflow now, and you can get it from trust request, or if you open up a trust request, you'll see it here as well, trust report, and all of the trust activity we'll be seeing here. So you'll see all of the activity within the Gravity portal. Now this is phase one of the integration. What I mean by that is, we have what we put forward is what we call an MVP, a minimal viable product. And we will handhold setting up the customer, setting up the client, and working with it, making sure they understand it. We absolutely expect to make it more polished, build more reports, and make this tighter. But we made a commitment to Gravity to get this online and get it working. So the one thing I want to say is if you have some LeanLaw clients, if you think this is attractive, please speak up, let me know. I'd be happy to set them up with this trust and work with that client to enable this function within LeanLaw. Any questions on that before I move on? Okay. We added a new feature here, which we're really excited about. So I'm under the billing tab in LeanLaw, under the receivables tab. And one of the beasts was that we could see receivables, but we couldn't see aging. So if you notice now, we have 30, 60, and 90 days aging so that a lawyer can come in and see not only what's receivables, but what the aging is. So if I look under Hessington, they've got 5,600 in aging. If I click into that, I'll see the actual invoices date. I can print those invoices again, resend them, do whatever I need to manage that. So the data is there now that you can see not only what clients are holding aging by matter, but then of course see, what the receivable is, but not only see that, in addition, the aging. So this report will get moved to the report section as well. Shortly, we want to get it out of the billing section because there's lots of folks that we don't want in the billing section. The other, and I'm hoping it's live here. Let's go. We now have this feature. So compensation tracking is very tricky for law firms. Not everyone has the same formula, and we're going to talk about that in our key conversation today in just a moment. But one of the things is that getting the underlying data is essential because some firms have very specific ways of doing their reporting. So what LeanLaw added is this feature. So we are automatically telling what was billed, what was collected, what a share is based on, did someone originate and take some percentage out? Did the firm take some money? And we're calculating that all in real time for the clients. But some firms want to go a step further. They want to look at the data in a different way. They have some other specifications that just aren't in our formulas or our models. So we created this allocation detail report. And this downloads a CSV file, essentially a file that can be measured by month or whatever data parameter, and allows you to get at the I think it's still downloading, and get at the underlying data. From that underlying data, then you can do whatever manipulations that you see fit for that law firm. So that's a really important chunk of data, and we're working very hard right now to get better at compensation tracking. Even pushing back a few other features, things we're doing in LeanLaw to get this. We have one particular client that we're doing some work for that is going to enhance our compensation tracking with one other specificity, meaning one thing we're adding this month, that when we do our reports, we set at the firm level what the origination, just so everyone understands what origination is, we're going to talk about it in a second. If Gary and I are partners in a firm, I find a client, and that's my client. I bring the client. Gary's a land use attorney, I'm not, but I source the client. Gary does the work. Gary might give me, by this calculation, 10% of collected revenue for sourcing that client. So that's what origination means. So sometimes when we go to matter level, origination may not be 10%. We might say for this matter, Gary says, hey, Jonathan, I'm not giving you 10%, I'll give you 4%. And so we're adding the functionality because he's just a hard guy. He's like, I'm not giving Fishman anything. But anyways, the idea here is that we're going matter level origination, which allows you to override what the firm has in origination. And if two lawyers cut a deal and say, hey, for this matter, we want a different rate, we're going to allow that and allow that flexibility. Okay, any questions on that? Great. So I'm going to jump now out of the product. Those are the things I wanted to show today, and move into our key conversation. So I want to introduce Gary. I want to introduce Gary Allen. Some of you may know him. He's my partner in crime. He and I came together in 2015. we were introduced by a mutual mentor, and started to work together, and have been together. Gosh, we've been joined at the hip now. What, Gary? It's 5 years.
6 years.
6 years. Yeah, 2014 is really when we started. We incorporated the company in 2015, and from an LLC to a C Corp. And that's when I officially joined the company. Gary was born and raised in Idaho. His schooling was from Dartmouth, and his law degree was from Stanford. He initially worked in San Diego for a sizable firm, right, Gary?
Yep, about 150 lawyer firm then, which is now part of a 2,000 lawyer firm.
He then moved back to Idaho, and settled in after working for a different firm to a local entity here called Givens Pursley, which was about a 30 to 35 attorney firm. And he's working very hard to retire from lawyering so that he can just be a LeanLaw person. And a fun fact on Gary is that he played collegiate tennis at Dartmouth with a handmade wooden racket. So, you know, that's.
It shows how old I am that I played with wooden rackets.
All right. So I'm going to stage this conversation. This is a 3-part conversation, meaning not today. Today is part 1 of 3. Today, we're going to talk about the backstory of law firms, kind of understanding structures and people and who they are, so that you have some context. And what I mean by that is, if we start jumping into saying an associate needs this report, we need to understand how law firms are structured, who the players are. So we're going to walk through that today, and then at the end get to the data. Our next meeting, which will be in October, is going to heavily focus on compensation tracking, like the nuts and bolts of it. And I'm probably going to invite someone in to do that conversation with us and really get into the weeds of that. Our last conversation of the year, which will be in November, I'm going to bring in a law firm performance consultant, someone who is hired by law firms, not necessarily a financial manager, but is to talk about performance consulting and speak to what they bring to law firms. So today is about the foundation of how law firms are structured and sort of data needs. Next week is sort of the mechanics of what these compensation reports are. And the following month will be about how that information is managed and presented to the client. December's meetup will be a state of the state, where Gary, again, will be back to join us with our CTO, and we'll talk about what 2020 is going to look like. Okay, so Gary, let's first talk about structures. And what I'm not focusing on, is it a corp, is it a sole proprietorship or a PLLC, but more like when you walk in, how are the relationships structured? So walk us through what these, essentially there's 2, and
right,
has a different, walk us through the different nuances.
Right. So thanks, Jonathan. I appreciate the opportunity to talk with everybody today. When you look at law firms, there's a whole bunch of them that are solo practitioners, and those, can be LLC or however they're structured from a liability perspective. But essentially, it's one lawyer doing the work, which makes the financials a lot simpler. There may be a paralegal or a secretary or office manager working with them, but it begins with that single lawyer. And it's amazing how many of these there are. Can everybody still hear me?
Yeah.
Okay.
Yeah.
I got a notice from Zoom somehow. And there's fully half of all law firms in the United States are sole proprietorships like this. Now, a lawyer takes on another lawyer, and typically that's done in a partnership. So that means that there's some form of sharing in how they split up the pie, and you might have one partner, you might have many partners, and so it really breaks down into a couple of models. So you have one where you have a dominant principal, so there's really one decision maker, one person making the decisions, and they might have a bunch of lawyers working with them who may be partners or associates, and we'll talk about what that exactly means. But really one person running the show. And then you have other firms that more like my firm, where you have more or less equals. So we have 25 partners, all of whom bring in most of their own business, and sort of have an equal seat around the table. So we'll talk about more things about these, but that's kind of the high level.
And one little note, which you can get some funkiness on, like really small partnerships. Like I remember one firm where they had 3 sets of books. So each attorney kept their own books, and then they had a shared books. So the entity, each attorney entity would then put money into the shared entity for overhead. So you can, with smaller firms, get some really interesting nuances in how they run their financials. As you start to get larger, you get obviously more sophisticated in your financials, as do how those shares work. And Gary, speak to that a little bit, how when you get into partnerships, how the shares are structured and how they change, can potentially change year over year based on partners coming and going.
Right. So again, a partnership is essentially a sharing of the profits of the law firm. And so you have, and that's a matter of who is in the partnership at any given time. So in my firm, you have, and I'm getting ahead a little bit, but like an objective compensation system, but there's also an ownership share, which is based on part of a profit pool that you buy into. But that's different every year. And it might be, we might even have multiple partnerships in the course of a year if somebody leaves in the middle of the year. So it can get quite involved how that works, and you have to be cognizant of the time component of it.
So let's talk about now, because we talk about the structures now for the players, and I know this is rudimentary for some of you, but we just don't want to ignore it, just to make sure that everyone has the same vernacular. So,
right.
Let's just kind of walk through this, Gary, for us.
Sure. So typically in a firm, you have a managing partner, so one person who's in charge of the firm, or you could have a managing group. My firm has 3 members who act as managing parters.
How often does that change? And
that's typically a generational thing. I mean, it's, if your firm can survive a transition from one manager, one generation of management to another, you're doing really well. They call that an evergreen model. There are some firms, like particularly where you've got a dominant principal, that principal retires, the firm typically breaks up at that point. But if you have, sort of a succession, so when, Ken Pursley, our original managing partner, retired, he was replaced by a 2-person management team, and now we have 3 in that position.
How are they elected, Gary? Like, how did your 3-person team get elected? And when you went from, Ed, there was a guy named Ed Miller who was the person, and then Fishman, how did the new 3 get elected? And why was it 3 and not 1?
Yeah, it's and they got elected essentially by drawing the short straw. These managing roles aren't necessarily popular in a law firm, in that lawyers make their money from charging clients typically, and it's harder to, if you're sort of taken away from the overall pie to pay for management, that's not necessarily as an attractive a position. But they're vetted by the existing managers and then voted on by the partners. And in my firm, virtually every decision is by consensus. So it's not a big competition usually.
What does the partner do? What does the managing partner do? Like, I know they practice law. I mean, are they the CEO of a law firm and they're making every decision? What do they do?
Yeah, typically they're, and it depends on the size of the firm, and obviously the larger the firm gets, the more support you're going to need. So the managing partner oversees the staff, or at least oversees someone who is overseeing the staff. They, kind of herd the cats among the partners to make decisions about how the partnership's going to operate, or big decisions that need to be made. You know, really taking care of the business side of the partnership so that the other partners can focus on practicing law.
Yeah. And so obviously, we'll get to this in a bit. One of the things that comes up a lot, I mean, I think the group knows paralegals, secretaries, accounting staff, these are the players in the firm. But the one thing I want to kind of talk about is the life cycle of, you know, let's just say it's a smaller firm, but essentially the life cycle of an attorney moving from when they're hired as an associate all the way up to partner. What does that life cycle look like? And how do you see it changing with millennials?
Interesting. Well, I mean, the thing about it's hard to be a good lawyer. When you come out of law school, you don't know the first thing about practicing law. So really the first 5 years, you're just learning how to practice. And, you know, not surprisingly, not very many people will hire you when you're at that stage. So you're reliant on other partners for work. And that continues sort of your next year as a next 5 years as a partner, where you really become able to manage a matter on your own and start to manage. Well, yeah, you really just become a good manager. After about 10 to 15 years, you add the skill of being able to manage partner relationships and really start to bring in your own clients. And then after that, you become, you know, in many cases, a rainmaker. So now you're 40, 45 years old. People are ready to hire you to actually work for them. And that gives you some autonomy, right? Once you have your own clients, if you don't like how things are going in your firm, you can hit the road and take your clients with you. And that's where some of these compensation issues become really critical. Now, after about 45, 50 years old, you know, that's when you might move into management. You might become more of a rainmaker, and in a really big firm, you might spend all of your time rainmaking, essentially, if you've got enough people working for you. So, you know,
What does that mean, Gary, when you say rainmaking? I mean, I get that there's some nuance of you bring client in, but is it just the, hey, I went outsourced a client and then someone else does all the work, or is there still a fair amount of handholding that you're doing even though you're not doing the lawyering?
Yeah, that depends on the lawyer. You know, usually you have the lawyer hired you, unless you're in one of these monster firms and you're working for a Fortune 500 company. They hired you because they want your attention as a lawyer. So you've got to give them that at some level. You know, you may have a lot of people working for you, or at least some people working for you, but you're going to be in charge of that client relationship. Now, as you know, the other lawyers under you start coming up, what typically happens is they'll take over that day-to-day relationship with the client, which makes it important from a compensation standpoint that that lawyer who brought the client in to begin with still has, you know, still compensated for doing that, or else they're going to go, hey, wait a minute, I'm going to lose, you know, all of that work. You know, if I'm working for this firm, they don't pay me over the long run for the clients I bring in, so I'm going to go somewhere else where they give me a better deal.
So how's the millennial thing playing into this?
Interesting.
Does it change?
I don't, you know, I think you see a little bit different work-life balance with millennials, but they all want the same things at the end of the day. I mean, we have some terrific millennial lawyers. I mean, one of the things about millennials is they started practicing law right at the beginning of, you know, the lead edge of that generation started practicing law right at the Great Recession. So they had a hard time getting jobs. And so like my firm attracted some of the best attorneys we've ever had at that time, who are now progressing through this cycle. You know, a lot of attorneys feel like when they're 25, 30 years old, they're never going to get their own clients, especially if they're in a firm where there are big rainmakers. And I always laugh when I hear that, because, you know, everybody can become capable to become a rainmaker, and it's important for almost everybody in the long run.
I guess the root of my question was really at, I was kind of thinking of some local people here where, you know, that one young gentleman who spun out of Gibbons.
Oh, right, sure.
And so there's this idea that running a law firm is so much easier today than it was for those that will embrace technology, so much easier than it was 10 years ago, 15 years ago.
Yeah, that's absolutely right. Yeah, that's another pull that you've got on these firms and how they're structuring their compensation is you now have young lawyers who can go out and cut their overhead by 50 to 80% by, you know, working in the cloud, working from home, you know, have a really lean model for their practice. And so that's also, you know, puts stress on a firm to accommodate what those people need.
Yeah.
And they're not doing a very good job of it, most of them, frankly.
The gentleman I'm talking about, I remember chatting with him and he's like, they forced me to have a secretary and I didn't know what to do with it. Like it was just this person I was trying to feed work to. And
Right.
He wanted, let's switch gears and talk, since we keep talking, referring back to compensation models. Let's walk through this models with the group. So this is the holy grail. All of you understand a profit and loss, a balance sheet, an income statement. You can get into, you know, how many hours, you can look at hours and how many billed and collected, but understanding compensation schematics are fundamentally the difference that takes someone from being candidly a bookkeeper to being a trusted advisor. You cannot be a trusted advisor unless you have some sense of how compensation works. And this is a fundamental area where your value add is, in that not only facilitating the calculation of this, or at least creating the underlying data that can create it, meaning the architecture that can create the data, but then how this interprets into so many different areas. And Gary has mentioned 3 times the idea that compensation tension can force lawyers to leave law firms. And it's all based on how the modeling goes. So let's walk through this, Gary.
Sure. Yeah. So the first model, this is popularized by a Boston firm called Hale and Dorr, which is a, you know, kind of Brahmin firm. They came up with this idea in the 1940s that there are different roles that need to be compensated in a law firm. And they called them the finder, who, in other words, the originator of the work, the minder, the one who minds that client relationship, and then the grinder, who's the one who actually does a lot of the work. And typically that there's an age aspect to those, not always. You know, you'll have a 60-year-old lawyer who's the finder, a 50-year-old lawyer who's the minder, and a 35 or 40-year-old lawyer who's the grinder, or maybe a bunch of them. And those correspond with originating attorney, responsible attorney, and working attorney in the way that LeanLaw works. And that's, you know, at least the way most of the time I've seen that as what we're calling a forward-looking system. So your compensation this year is based on what you produce this year under these different aspects of the compensation and how they are set forth in your compensation scheme. So, you know, if it's an objective model, there's gonna be a percentage assigned to that finder. There might be a percentage assigned to the minder. You know, like in my firm, the finder is 15%. The minder gets nothing, actually, and then the grinder gets in my firm gets the bulk of the credit for that.
And you could have the working and originator be the same, right? It's not that it's, you know, Gary might originate his work and do the working. Would someone else be responsible for that? Would another attorney potentially be responsible and you would be the originator and working? Rarely.
I can't think of a time that's happened, but often I'm the originator and somebody else is the responsible and working attorney. Yeah. You know, if we get a matter that is a water law matter or, you know, a litigation matter that I'm not going to do, that's how that's structured.
Well, explain that in a little bit greater detail. Just be a little bit more detailed than what that means. So
yeah, sure. So
that's really,
let's say I get a
super important.
You know, I have a client who's a real estate developer, and they come in and I get the permits to get their project built. But then they come in and say, hey, we need some water rights for this, which is a big deal out here in the arid West. So we need water rights for ponds and, you know, whatever else we're doing in the development. Well, I don't do water law, but I have a partner who does. So I hand off that matter to that person who's going to take care of that client. He's going to do the work. He's going to send the bills. So he becomes the minder, the responsible attorney, and the grinder, the person who actually does the work. And then I get a little share of that because I was the originator of the work.
And that, just understanding that is super important because that gets into the nuance of setting up these compensation models under Hale and Dorr.
Yep.
And that's very fluid between the attorneys. And so that's important in the, you know, in LeanLaw, we identify when we bring in matters, who's responsible and who's originator. And so you might have matter A, Gary said, you know, doing some permits where Gary's the responsible and originator. Then matter B, some other attorney is responsible, Gary's originator, and then of course the working. So, you know, it's really important to understand how that law firm is tracking their revenue and what expectations there are, and making sure that ties into your reports and your tools that track it as well.
Right.
Okay, let's keep going.
Right. So, and I would say that these models are not necessarily exclusive. So I'm going to talk about share models here in a second, but my firm's compensation system includes a profit pool where some of the money is set aside and shared according to a fixed percentage of ownership. And of course, you've also got to track overhead and subtract overhead from, you know, however you're going to do it, pro rata or as a percentage of revenue, so that you can come to a profit number. So that's essentially the objective model. The share model tends to be backward looking. So you look back at the last year and say, oh, how did we do last year? And we divide up the share going forward. Now, the old school model of a share model is what they call lockstep. So a lockstep model is a senior where you're compensated essentially solely based on seniority. So you're a young associate, you get a certain amount, or you might get a salary, you become a partner, and then as you go along, you know, build a bigger share, and when you're older in your practice, you make the most money. And that was very popular 50 years ago, and most law firms operated that way. Well, the problem is you're at your most productive as a lawyer between, say, 40 and 50 years old in a lot of ways, and you're owning those client relationships, and you're seeing the 60-year-old partner making all the money, and they're playing golf most of the time. And so you get, you know, there's a real tension that builds up associated with that, and that's when people leave law firms with their clients, and there's been, you know, endless amounts of that here in the last 20 or 30 years.
And that's what I was getting at. I'm sorry to interrupt you, Gary, but that's what I was getting at with millennials. Like, they'll just won't tolerate, that generation won't tolerate that model.
Yeah, I don't know a lot of firms that still have a straight lockstep model like that. I think a lot of them still do have a share model where you look back at last year and you look at some of these objective factors, and you may look at subjective factors as well, like, oh, how much time did you spend on management? How much did you do pro bono work? How much did you work on marketing for the firm? And then they set a share for the year going forward. And, you know, then at the end of the year, you just get that share of the profit. Now you can see where the tension builds up there. If you have a bad year one year, and then you have a great year the next year, and you're getting a much, you know, you're not getting compensated for what you did then. And these, you know, systems can work because theoretically that works out over time, but it, you know, it can be a real tough thing to swallow, that you know, and you may never catch up on some of the years that you have. And so it creates this tension within the firm. And, you know, practicing law is hard. You know, you have lots of conflict and people screaming at you on all sides. And to put this tension on top of that is really a big problem, and creates, you know, some of the worst parts of practicing law, in my opinion.
Well, and I also think it's, you know, you've talked about this, Gary, that compensation committees meet, you know, in secret and make these sort of subjective, pseudo-subjective, you know, they say it's based on something, allocation of bonuses. And so for, you know, attorneys or associates, I mean, my sister-in-law is an attorney. She's never going to be an originator. She's just a grinder. She's a great grinder. And she has all this tension to get her hours up so that at the end of the year, there's some basis. And she just has all of this crazy tension on billing hours, especially in the, you know, November to end of the year, that she's just, it's unbelievable how much time she's doing. You know, she's my age and I'm 52, and she's doing, you know, 18-hour days, grinding out all this hours to meet her compensations, with the hope that she gets this, you know, big bonus at the end of the year. And I don't think that's a very healthy model because of the uncertainty and this idea that they put that stress through it. So
I agree. I mean, my first law firm had a model like this, and it was incredible how many little side conversations were happening in closed doors and different offices, and the whole firm blew into pieces after less than 2 years of my being there. And I don't think that was all my fault. It's a tough thing. Yeah.
Before we jump into this next slide, I'm just curious if anyone in the group has any questions about what we just went through, or any comments, because what we just talked about is pretty important.
I actually do. It's Annette speaking. Can we go back one slide?
Yeah.
What I'm not understanding is how anything could be forward-looking, given that, you know, you figure out what was collected and who originated it and who did the work and all that when you are allocating compensation.
Yeah, I think
I get how it's all backward-looking.
Yeah, maybe the wording is poor, that it really should be present looking, or like this year, focused on this year rather than last year.
Well,
it is backwards looking in that it tends to be based on collections rather than billed hours or anything like that.
Okay.
So I think it just could have used a better word, I think.
Yeah,
Can I pipe in for a second? Because I've
Sure.
had a lot of these discussions. This is Karen Schwartz. So one of the things I think that also causes a lot of tension, which is a little bit of the backward forward looking, is you may have a partner who brought the client in 5 years ago, and for whatever reason has barely talked to the client. Somebody else is really doing all the work and talking to the client and everything else, and the partner is still getting the reward for originally introducing this client to the firm five years ago, but not doing anything anymore. And I think that is a big source of the resentment.
Absolutely.
Yeah, absolutely. Yeah, good point, Karen. I figured it just, since we have a little bit of time before I get to this last slide, I wanted to just kind of translate what Gary just spoke to, but in LeanLaw visibility. So when we set up a law firm, we go into this report section and we say, what percentage? Gary said his firm was 15. Right? That's what he said. What originates the overall thing is 15. And Gary doesn't take a firm share off the top. It's calculated in the overhead is calculated in a fairly elaborate, you know, Excel sheet that is a whole different webinar. Once that's done, you come into this revenue by attorney report. And I think what Gary's saying is present is compensation typically is saying, what am I going to get this month? So instead of going to this report, let me just show you real quick. Instead of going here to, you know, like a timekeeper productivity and say, what happened last year, and look at let me get a bigger data set. The more subjective one is to look at a larger data set and just what did we do last year and derive some calculation off of the full year and say, okay, Fishman, David Cohen did $150,000 of the value of the hours. So let's look at some compensation, bonus for him versus the present, what I think Gary was speaking to in the Allen door, which is, this month, what check is Fishman going, or what check is David Cohen going to get this month, right? So it's not about his aggregate compensation or his extra compensation in first quarter of 2021. It's what is he going to get cut this month? And so Linda Arzani and I are working with a very large firm that wants to has a very elaborate schematic of this Hallandor method that they want it all automated because the attorneys get paid in, monthly, and they need to see this data live. So if you have someone who's a big originator, and I don't have great data here, they would see that number, what they're going to originate, and that would be their expectation of a check cut at the end of the month. Harvey Specter would expect to get $82.50, and he can make his own planning accordingly, right? Versus David Cohen, who's expecting to get his $5,200. That's the present of the Hallandor, and it empowers those attorneys to earn what they want to earn based on their work versus the subjective method, which is sort of after the fact.
Yeah, so my firm, you have a draw account. So whenever you earn money during a month, it just drops into the draw account and you can draw against that balance.
Okay, let's go to our last slide. And I apologize in advance if this slide's a little hard to read, but I'll have Gary walk through it. But what we want to do is after we talked about the structure, we talked about the players, we dove a little bit into compensation structures. We wanted to talk a little bit about what data each kind of group needs. And on the very top line, you're going to see the grouping. And we're going to focus mostly on the left side. The management team, the responsible attorney partners, the second column, and the billing accounting manager. What they care about, like what we perceive at LeanLaw that this community cares about, what data is actionable, and that's what's highlighted in red, and what do those translate to in terms of reports. And I know this is kind of an internal worksheet that Gary produced, so it's not perfect, and it's not meant to be perfect, but it does give you a sense of our perception of it, Gary. So why don't you walk through the management team and just go down that vertical.
Right. So essentially what we're talking about here is who needs what information when. And there's actually one more column on this in the larger version, which is just, sort of occasional reports. But what we're focused on here is the most actionable information.
Yeah, and I'm sorry to interrupt you, but I took that section out because it was too hard to read on this page.
Yeah, it's just long and there's a lot in there. And a lot of billing tools get lost in those sort of occasional reports. Like my firm uses a tool called SharePoint, and there must be 100 different reports that you can pull out, and they don't differentiate any of them for you. So you get lost in a blizzard of data. So what we have across the top are the who. So the management team has different needs than an individual partner as opposed to the accounting manager. And they have different things that they care about. So that management team, they care about how the firm is doing as a whole. And if you look at, but as compared to the responsible attorney or partner, they may care about the firm, but that's not their primary focus. They're really focused on how my practice is doing, how my clients are doing, and how those people I work with are doing in their practice. And then the billing people their interests are a little bit differently focused, but they're also on the firm. So what this group of actionable data that you see on here, that's kind of what we're envisioning as part of a dashboard for a firm, something you might want to see on any day. And we actually came up with what we think is a workable definition of what's of a data insight or actionable data here, which is it's something that's revealing. It tells you something important about the firm. It is, and it's instantly understandable, and it and it's actionable. So there's something you can do with it. And so these reports tend to fit into that. So if you think about the management team, you know, one of the things you would hope they would care about is the cash flow and your overhead. So just kind of making sure the solvency of the business is there. That's stuff that you may need, you know, in real time. So that's something that's important to have. Then you want to kind of see how's your productivity going in the firm. So what are billable hours like? What are your billings and receipts like, both by attorney and by client? So you can see, you know, do we have problem clients? Do we have attorneys who aren't fully utilized? Things like that.
No,
Now
and something that might be a function where a management team might be working with one particular attorney on coaching them because they're looking and saying, oh, this one attorney's having some trouble clients, and they might coach that attorney. That's part of that, you know, that evolution from associate attorney to partner. Keep going, Gary,
exactly.
I shouldn't talk because we're running out of time.
Yep. So the responsible attorney, they're really, you know, they want to understand their receivables aging so they can work on collections. They have work in progress, both by their matters and by their client. You know, am I overworking this matter? Is the work not getting done? And then also, of course, receipts. That's, you know, sort of the bottom line in most firms is the money coming in the door. And especially if you're in an objective system where that's important to your compensation. Now, the billing and accounting manager, they're, you know, at that overhead, that dashboard level, really focused again on cash flow and overhead, things like that. And you may have billing staff who need to know more about accounts receivable and payable because they're out there trying to, you know, push the clients who are paying too slowly and whatnot. Now, compensation, some firms want that instantaneously, but more typically that's a periodic report, like a weekly or a monthly report, and it can be more complicated to calculate as well, and may need, you know, some sort of month-end reconciliation to make it work. But for both the management team and the responsible attorney, they're really dialed in on those compensation reports. And, you know, I know we'll talk in future months about how you go about creating those reports, but that's, you know, really critical and on a high level. And then you've got a number of other reports that, you know, come on that monthly or other cycle, maybe quarterly cycle, where you're understanding fee receipts, AR, WIP, trust balances and activity, costs, how much money do you have out that's not, you know, time related, and adjustments and write-offs and things like that. And then you have a subset of that for the responsible attorney, just for their own practice. And then, you know, the billing and accounting managers are now focused on the more traditional types of reports like general ledger activity, their trial balance, things like that. So, you know, we thought this was useful to kind of break this up this way, and it gives you some idea of what the data looks like.
But one note, I think it's important to know that we're seeing at LeanLaw is the idea that this data is not stale. So Gary said that some firms are sort of accustomed to getting it quarterly, or, you know, or some other sort of reports. And what we're seeing at LeanLaw is this, that the leading firms, the firms that are out ahead, that are adopting QuickBooks Online, that are really out saying, hey, we want LeanLaw, actually want more of this data live and don't want to wait for it. So I think that the idea that it can be quarterly is something that will change in the next, I think, 36 months. And as more tools come out, like we talked a lot about Reach reporting, the aggregate dashboard that can take QuickBooks data, can take LeanLaw data. We're working on that. That's not live or anything. But the idea that you could aggregate the data from multiple sources to give really important KPIs. Remember, every firm has different sort of ideas. One firm thinks trust to WIP is the most important thing. Other firms think the hail and door report is the most important thing. And that's part of the process. Okay, we're done for today. And I know we had to rush through that a little bit. Linda said both Linda and Patrick said, or John, I don't, do you go by Patrick or John? Anyways.
Patrick.
Patrick said they want a copy of the PowerPoint, which we'll share with the group. Linda also asked if Gary could come back again, and Gary will be here in December and will probably be here again for the compensation reports to add that lawyer's perspective.
You tell me where to be, Linda, and I'll be there.
Yeah, we thank you all, as always, for participating and giving your feedback. We hope you enjoyed today. We really would love for feedback. So if there's something you want more of, we're going to work to make more of it. And if you want less of something, we'll do less of that. So give us your notes. Thank you all for your comments in there. I wish you all a lovely rest of your Wednesday, and thank you for being part of our community, and look for the September 15th launch of our online content. You'll get some emails about that. Have a great day, everyone. I'm going to end the session now.